I would like to welcome you all in the today's webinar. I would like to invite and the webinar, as you all know, we have shared the posters with you. Everyone knows that who is going to take this webinar on fundamentals of GST. That is like a core subject for us as well. Before starting with the event, here are some instructions I would like to tell you all so that we can have the sessions without any interruptions. So please keep your mics off as we have a Q&A sessions in the last, and you all guys can share your questions in Q&A box, and we'll take up that so that please keep your mics off to maintain the decorum of the event. And there will be an attendance sheet shared at around 5:30. I would like to please when start starting the session, mark your attendance in the attendance sheet, and there will be a feedback form at 5:45. We will share the link in the chat box. Please fill that feedback form on time. And now I would like to invite Dr. Ritika Jain ma'am, a convener of today's webinar, professor in Department of Commerce, Hansraj College. Ma'am, the stage is yours.
Thank you. Thank you, Prerna. And I really welcome you all to this webinar on fundamentals of GST, which Hansraj College is organizing in collaboration with the Taxo Academy. So, first of all, I would like to thank Taxo Academy for joining in with the Hansraj College for this very apt webinar on the GST. Now, you all know as a consumer, we are paying GST on the goods, the services that we are availing. But this journey to the GST has not been so smooth. You must be having knowledge as a commerce student or probably as a non-commerce student. The journey is from the sales tax to the VAT and the service tax. And today we are in the GST regime. And this regime is in tandem with the government of India, philosophy of one nation, one tax. So the multiple indirect taxes which were there that has been overtaken by one form of indirect tax, GST, and yes, the process is still going on. So in line with that, we have this webinar which is going to enlighten you on the concepts of the GST, the calculation methodologies involved in the calculation of the GST, and definitely to resolve your queries related to the GST. So now, another important thing I would like to say, this webinar is not only apt for the commerce undergraduates, it is even apt for non-commerce graduates, undergraduates, because you see, we today see a lot of entrepreneurial pursuit in the students. And when I say about the entrepreneurship, you would see that it's a business we are talking about, and any business, it has to be the sales that need to be there. And when the sales come into the picture, you need to know about the GST. So the purpose of this webinar is to provide you with that basic knowledge and to resolve the queries you have in your mind regarding the GST. And for this purpose, we have our esteemed guest speaker of the day, CA Anup Gupta ji. I really welcome you from the core of my heart to this webinar, sir. Welcome you, sir, to this webinar. You would be surprised to know that he has an immense exposure to the indirect taxes. He is a part of the committee member of the indirect taxes at the ICAI. He is also the training faculty member at the Pradhan Mantri Kaushal Yojana, and more detail about his profile is going to be taken up by Prerna. So I'm really thankful to Anup Gupta ji for accepting our invite and enlightening our student on the GST regime. Thank you so much, sir.
Thank you, ma'am. Thank you.
Firstly, this is our honor that you are taking this session for all of Hansra's students and all of the students here. Thank you so much, sir. Starting with the start.
Yeah, just a minute, Prerna. Let me just finish up. I would also take this opportunity to thank Miss Juhi Garg, ma'am. She is the pillar behind this webinar. She took up this initiative of taking up this webinar on the GST topic with the students, and and taking up the thing of collaborating with the Hansraj College in order to, further enlighten and create more understanding about the GST. So thank you, Juhi ma'am, even for collaborating with the Hansraj College. Now over to you, Prerna, to further, tell about Sir profile so that students know from whom they are being enlightened on GST. Thank you.
Yeah. So, like you all will be surprised that C. Anup Gupta sir is qualified as a chartered accountant in November 2001. He is a senior partner in APRA and Associates LLP, which is renowned name in the field of indirect and direct taxes. His core competency and area of expertise includes GST, services, tax, and VAT. He remained a member of Indirect Tax Committee of Institute of Chartered Accountant of India. He remained member in the study group of services tax of ICI. He was a member in research group on GST constituted by Institute of Chartered Accountants of India during 2015 and 16. Also, he is a regular speaker in a various seminars and training conducted by ICI, study groups of NIRC, of ICI and other branches and forums. He is also a faculty of GST trainings of trainers program under Pradhan Mantri Kaushal Vikas Yojana. He is heading the Delhi GST chapter of Federation of Indian Industries. He has been called upon by various PSUs, MNCs, and other companies and organizations to provide corporate training on taxation and aligned matters, as like the profile also shows that how knowledgeable he is. So now I would like to invite C. Anu Gupta sir to please start with the session.
Thank you, ma'am. Thank you very much. From the core of my heart, I am very thankful to Hansraj College for inviting me to share my thoughts on GST with the students. And I am very much, you may say, cheerful to interact with the students. First of all, I must tell you that my son is also a DU student, and he is pursuing BCom honors from Motilal Nehru College. So, for me, interacting with the children of the age of my son and pursuing the similar course is just like interacting with my own child. So, keeping this in mind, and thank you for again for giving me this opportunity. So let's start with the session. I'm sharing the screen to you. Please let me know whether it is visible.
Yeah. Sir, it's visible.
Okay. So I must say friends, or I must say children, or whatever you may say. We will today discuss something very basic, fundamentals of GST. What is GST? Why GST? How come it? What are the basic ingredients of the GST law? What are the procedures? What are the requirements of filing of returns? What are the invoicing requirements? What is the concept of input tax credit? And how the GST is to be read by a student. As a student, I am also a student of GST. Okay, you may say me as a faculty, or you may say that I am a expert, or whatever ma'am has said, like that. But whenever we are in a professional arena, then always we are a student. We have to study and keep abreast with all the new developments, all the new case laws, the amendments, notifications, circulars, press notes, GST Council meetings, guidelines, and all those things we have to study, like you students are studying every now and then. So I am also a student in GST, I must say that. So what is GST? As we all know, GST is goods and services tax. Earlier, in India, there were multiple taxes governing taxes on goods and taxes on services. But the GST has combined both of them and bring them on the one pedestal, that is goods and services are now on one pedestal and they will be taxed harmoniously in GST. So the one concept was that GST will be the goods and services tax. So it is goods and services tax, we know. Going forward, what was the need to introduce GST in India? What were the tax structure before the GST come into India from 1st July 2017, right? So all the main five taxes which were included in the GST regime before the introduction of GST were excise duty, and for levy of excise, the taxable event was the manufacture. When there was any manufacturing involved, then the excise duty will come into picture and it will be levied. Afterwards, there was a service tax on the provision of services. If there is any service provision from any business point of view, then service tax was applicable. After that, VAT, or you may say central sales tax and sales tax. These were the taxes on the sale of goods. Some for sale of goods inside a state, there was VAT, and for sale of goods interstate, there was central sales tax. Then there was customs duty on the. Hello, is there anything? Customs duty, it was on import and sometimes on export of goods outside India. Custom duty is still there, but the custom duty, besides custom duty, there were some other taxes also involved while we import and export. That is the SAD, CVD, that is countervailing duty. Some additional duties were there. They are all subsumed in GST now. Only thing remaining is the basic customs duty, and cess thereon is still applicable on the import and export transactions. Entry tax, there were some other taxes also, like entry tax, entertainment tax, octroi. There were different taxable events for these taxes. One was on, like we are seeing, one was on manufacture, one was on the provision of service, one was on the sale, one was on the import and export, one was on the entertainment or entry of goods inside a state, and like that. But all those taxes are now being subsumed in GST, and there is only one taxable event now. What is that taxable event? That taxable, sir, before that taxable event is the supply. Supply plays a major role now, and supply of goods or services is the taxable event now. So, what is GST? First of all, it is a destination based consumption of goods and services tax. What do you mean by destination based? Destination means that where the goods or services are ultimately consumed, that is the state which will be getting the GST tax of that transaction. Like I sell some goods from Delhi to Mumbai. So the goods are consumed in Mumbai. So the GST paid on those goods will be transferred to the state of Maharashtra. The state of Maharashtra will be the beneficiary of those goods and services tax paid on that transaction. It is levied at all stages. It is a VAT type of thing. In some countries, GST is also known as VAT, that is value added tax. And in our country, it is called GST because in our country, already there was the concept of VAT in the form of sale of goods transaction. So, it is called goods and services tax in our country, and it is levied up to at each transaction. Whenever the goods or services changed hand, at each level of transaction, the goods or services tax is applicable. So, but what is the nutshell of it? That only the value addition. When I'm in the coming slides, I will be discussing the provisions of input tax credit. So, at the output side, when I give some services or goods to anybody, then on that I pay output tax. And when I receive some services or goods from my vendors, then I pay GST, that is input tax on them. So I will be taking the benefit of the input tax, that is called input tax credit, and I will be paying the output tax on the goods and services given by me or sold by me. And I will be, when the net of both of these will be uh, paid by me to the government. So what are the kinds of GST involved in India? It is a unique structure in India that we have got three types of GST involved. In intrastate transaction, two types of GST is payable, as we all know, that central goods and services tax and state goods and services tax. Why we are paying these two type of taxes on one transaction only? Why not only one tax is payable? Basically, India is a federal country. We have got state governments, we have got central government, and for state government there is a separate budget. For central government there is a separate budget. They have to procure some revenue out of that budget, and they have to make some the government for the government they have to make some expenditure on the government expenditure. For that they need revenue. So the CGST portion in an intrastate transaction goes to the center for its government revenue, and the SGST portion goes to the respective state where the goods or services are consumed. So in intrastate transactions, CGST and SGST, both of these components are there. So they are basically on equal rate. There is an equal rate of CGST and SGST right now on any transaction. Like if my transaction is taxable at the rate of 18%, then CGST is 9% and SGST is 9%. That 9% will go to central government and that 9% will go to the state government. In interstate transaction, we have got IGST. What is IGST? IGST is integrated GST. And integrated GST, the rate of integrated GST is sum total of CGST plus SGST. Like in our example, it is 9% plus 9%. So if I sell some goods interstate, that is from, let's say, Delhi to Mumbai only, then in that case, IGST will be applicable and IGST rate will be 18%. What will be done to this IGST? Where did this IGST thing go? Whether it will go into the kitty of central government or whether it will go into the kitty of state government. In case of IGST transaction, the two portions will be segregated. One portion will go to CGST and the other portion will go to state. That is the state where the goods or services are consumed. The destination state will get its pie. The IGST will be broken into two parts. But we paying IGST, that will be broken into two parts, and one part will go to the central government and the other part will go to the state government. So SGST or state is levied on the intrastate, that we have already discussed. Central goods and services tax, that I am not going to repeat this. It is only for your understanding that I am given this in this slide. So now to charge a GST from anybody, first of all, I should be registered under GST. I should be registered with the government. So let's say I am dealing in different type of goods and I am also charging CGST, SGST, and I am also charging IGST. I am eligible to charge that. In that case, I have to take a registration from GST authorities, and it will be only one registration only. even if I am charging IGST, CGST, or SGST. Unlike the previous regime, I don't have to take separate registration for each type of tax. Even for central government part and even for state government part, I have to take only one register in one state. So, what is a GST registration? It is a unique number that I have to take, then only I will be able to collect tax on behalf of the government, and I will be able to avail the input tax credit paid on my inward supplies. If I am not registered, how can I take the input tax credit? I cannot take the input tax credit in that case. And also, I cannot charge GST from anybody. So, when I take a registration, what will happen? I will be a legally recognized supplier of goods or services and legally authorized to collect tax from the customers and pass on the credit of taxes paid on the goods or services supplied to the purchasers or recipients. So, only when I will be a registered person under GST, then only I will be able to do all these things. And there are some mandatory registration requirement, like if I have a turnover of more than 20 lakhs in a state, and in some state it is 10 lakhs, then I have to take registration under GST compulsorily. Also, even if my turnover is below this threshold limit, then also I can take registration under GST voluntarily. But once I have taken the registration under GST, then all the supplies which I am making, on that I have to charge GST and pay GST accordingly. So the question is where to take registration. Suppose I have got a shop in Delhi and also I have got a shop in Gurgaon. In that case, I have got two shops in two different states. For each state, I have to take separate registrations. One registration is required in one state, but if I go across the states, then from each state where I am doing the business or where I am effecting the taxable supplies, from there I have to take registration under GST. What is GSTIN? GSTIN is the GST registration number or GST identification number to be more precise. And it is a 15-digit GST registration number which is allotted by the authorities when I apply for it. I have already told you that in case of SGST, CGST and IGST, I have to take a single registration in one state. I can take multiple registration in one state also if I want to do that, but one registration is enough. But if my business is such that I want to take more than one registration, then in that case, I can take multiple registration in one state also. Now we come to the very important aspect of supply. Supply is the taxable event under GST. First of all, whenever Vivek sir, anything you want to add? Yeah. So the supply is the basic uh, thing which I have to see whenever I have to make some whether I will be charging GST or not. First of all, what has to be seen by me, whether my transaction is covered under the definition of supply. Yes, if my definition, if my my activity is covered under the definition of supply, then I have to see whether that supply is covered under any negative list or in exemption category or nil rated category or any other category which is not taxable under GST, or whether it is covered under the taxable category. If it is covered under taxable category, then I have to see what is the rate of tax applicable on that category. That rate I have to apply, and then I have to charge GST from my customers accordingly. So let's come again to the definition of the supply. What is covered under the supply? All form of supply of goods and or services such as sale, transfer, barter, exchange, license, rental, lease, or disposal. So any type of economical activity is covered under the definition of supply, right? But what are the two conditions which is to be satisfied in order to be made, in order to make an activity a supply? The first condition is that it should be made or agreed to be made for a consideration. That means that supply should be for a consideration. A element of consideration should be involved in the supply. Then only it will be a supply under GST. The second condition is it should be in the course or furtherance of business. The two ingredients of supply are, first of all, it can be any economic activity. Then I have to see the two conditions, that whether a consideration element of consideration is involved in it and whether it is in the course or furtherance of business. Then my activity will be a supply under GST. Now I have told you that in in order to be a supply, there should be an element of consideration. But now I am saying that in certain transactions, if it is a in certain transaction, if it is an import of service, then even if it is not in the course or furtherance of business, but the element of consideration is involved in it, then also it is a taxable supply. Then also it is a supply. And in cases, there are some cases specified in Schedule 1 of the GST Act where they are saying that even if the supply is made or agreed to be made without any consideration, then also it is to be treated as supply and GST is to be applied on those supplies. What kind of supplies are those? In Schedule 1, we have given, like if there is a supply between the related persons, if there is a supply between the branches of one, like I have said that my one shop is in Delhi and one shop is in Gurgaon, I am making any stock transfer from my one shop to another shop, then obviously I will not be charging anything, any consideration, and it is the supply from me to me only. But since there are two separate registrations under GST, one is in Delhi, one is in Haryana. So whenever I supply some goods or merchandise from this location to my other location, then also it will be treated as a supply and the GST will be applicable on it. But friends, one more thing come into my mind. Whenever I said that GST is applicable on a transaction without consideration, how GST will be applicable on that? How GST will be payable on that? So on what value I will be giving the GST? For that, there are valuation provisions. Section 15 of the GST Act, along with the rules therein, contained therein, I have been given the valuation provisions where I have to arrive at the value on which GST has to be paid on the transaction where there is no consideration, but which are to be treated as a supply under GST. And there is a negative list of goods and supply of goods or services which are neither to be treated as supply of goods or neither to be treated as supply of services, like services by an employee to employer in relation to an employment, services of funeral, burial, crematorium, including transportation of deceased. There are some services on which they will not be treated as a supply under GST. Therefore, no GST implications of these. They are contained in Schedule 3 of the GST Act. We have to see that. There are total 3 schedules in the GST Act. Schedule 1, we have already discussed that those supplies which do not carry any consideration, they are to be treated as supplies. Schedule 3 are those which are not to be treated as supply at all. And Schedule 2. Schedule 2 contain those supplies, they are clarificatory in the nature. They tell us that Schedule 2, which transaction is to be treated as supply of goods and which supply is to be treated as supply of services. Like we go to a restaurant and we have food there. All of us go to a cafeteria or a restaurant and we have food and other things there. So, what do you think it is? Whether it is a supply of goods or whether it is a supply of services? If we think, both are the elements contained therein. For the services, for the ambience, for the cutlery they are providing, for the services of that waiter and all those things, it is a service portion. And for the food which we are consuming, it is a goods portion. So both of the elements are there. It is a borderline transaction. And secondly, the construction of a building. If I am a contractor and I am constructing a building for you, so what is it? Whether it is a supply of goods or whether it is a supply of services. I am constructing it, I am employing the labor therein. So it is a supply of service, but I am incorporating some goods therein. So it is a supply of goods. So Schedule 2 talks about all these transactions, that whether this transaction will be treated as a supply of service or whether it will be treated as a supply of goods. In the erstwhile regime, there was so much litigation, so much confusion among the taxpayers and the authorities also, that whether this particular transaction will be treated as a supply of goods or whether this supply will be treated as supply of services. In those cases, both the VAT department and the service tax department going to charge their taxes. Like in construction, VAT is also to be paid on 75 to 80% value, and on services, they are also going to be paid the service tax on 40 to 60% or 70% value. So, in effect, on some transaction, there was a tax on 150% of the value of the supply. But in GST, they have given that whether a particular supply will be treated as a supply of goods and supply of services, and GST will be applicable there. Now we come to a very important aspect of input tax credit. What is input tax credit and how it is to be taken? Students, first of all, I must apprise you that input tax credit is the very important aspect of GST, and based on this only that we are the GST was introduced just to smoothen the flow of input tax credit in the country as a whole. As the madam has already said, that one nation, one tax was the phenomenon behind the introduction of GST. And this also means that there is a seamless flow of input tax credit. Why it was required? In the erstwhile regime, we have got many taxes. Like we don't get the credit of excise duty against the payment of VAT, or we don't get the credit of central sales tax against the sale of goods, and when we are paying VAT on that, we are not getting various credits, and inter tax credits were not allowed. But when all these taxes are subsumed into one tax, then the input tax credit can be taken on all the activities which I am doing for providing the output taxable activity. So if I am providing any output taxable activity, for that purpose, if I am taking any input tax, any input supplies, so GST paid on that input supply will be an input tax credit in my hand, and I will be taking that credit to pay my output tax liability. Let us understand this concept of input tax credit. This is if we understand the input tax credit concept, and the conditions and all those things pertaining to the input tax credit, then half the battle is won. The GST, half the battle of GST is won by just understanding the concept of input tax credit. So let's take an example and try to understand the concept of input tax credit from this example. Let's say there is a manufacturer and it is manufacturing, let's say, laptop. So it is has provided, the manufacturer has supplied one laptop to a shopkeeper for rupees 1 lakh, and on that 80 at the rate of 18%, 18,000 GST is applicable. So what the total amount manufacturer will charge to the shopkeeper is 1 lakh plus 18,000, that is 1 lakh 18,000 the manufacturer will be charging to the shopkeeper. What the shopkeeper will do, now there is a customer, a boy like you, who is consumer, and that shopkeeper is selling that laptop to the consumer for, let's say, rupees 1,50,000. On that 1,50,000, it will be charging GST at the rate of 18% again, that is 27,000, and it will be giving it to the customer for 1,77,000. Now, the question before us is, what is the amount of GST the shopkeeper will have to pay to the government authorities? And ultimately, what will be the profit of that shopkeeper? So we will first check what is the output liability of the shopkeeper. Output is rupees 1,50,000, and on that 27,000 was GST. So his output liability is 27,000. And what is the input tax credit which a shopkeeper is entitled to claim? It is rupees 18,000 GST which it had paid at the time of purchasing from the manufacturer. So 18,000 is his input tax credit and 27,000 is his output tax liability. So in effect, what he will write in his GST return, my output tax liability is 27,000. Input tax credit in my hand is 18,000. So the remaining is only 9,000. That 9,000 I have to pay to the government. So it is that in that way that GST will work out. Now, what will be the profit of the shopkeeper? Its sale value is 1,77,000 and its purchase value is 1,18,000. So his profit will be, whether its profit will be 59,000 or whether his profit will be, but 27,000 it has paid to the government authorities. So 1,50,000 minus 1,18,000, whether his profit will be 32,000 or whether his profit will be 50,000. This is the question before you guys. You try to answer this question, and as per my understanding, the profit of the shopkeeper will be 50,000. 50,000 will be the profit of the shopkeeper. How I have calculated this? 1 lakh is his purchase price. 18,000 is the ITC. He is paying 1,18,000, but 18,000 it has taken as input tax credit, and it will not be added into his purchase cost. The purchase cost of the laptop for the shopkeeper is 1 lakh, and on that 1 lakh, it is selling that laptop from 1,50,000, and 27,000 is his output tax liability. So 1,50,000 is his sale value, which he will be crediting to his profit and loss account, and 1 lakh will be his purchase value, which he will be debiting to its profit and loss account or trading account, whatever you may say, and 18,000 will be his current asset, and which will be offsetting against the current liability of 27,000. So the ultimate profit of that shopkeeper on this transaction will be 50,000. And on if this input tax credit concept would not be there, in that case, that 1,18,000 will be the cost to the shopkeeper, and his profit will reduce to 32,000 only. But when in case of GST, the input tax credit is available to it, then its profit rose by 18,000, and now the resultant profit is 50,000. Right? I think I can able to convey my message to you that what is the impact of input tax credit on the profit of a particular shopkeeper, and how the cost of the commodities will be reduced if GST is introduced. Right? GST to be paid by shopkeeper to the government 9,000, and the profit will be 50,000. Now I am coming to a concept of invoicing under GST. Invoice is the very basic document under GST. On the basis of invoice you may say it is a duty paying document. On invoice only we will be charging the GST, CGST, SGST or IGST. As I have already told you that how to check that what is my transaction. There may be a tax. My transaction is a supply. First of all, I have to see whether it is a supply or it is not a supply. So it may be a no supply, or it may be a supply. It may be a taxable supply, right? So first of all, I have to determine whether it is a no supply, it is a taxable supply, it is exempted supply, it is a nil rated supply. So there it is a zero rated supply. So there a supply can be of a number of types. So I have to see if my transaction is not covered under the definition of supply, then it is a no supply. If my transaction is covered under the definition of supply, but it is exempted by way of a notification, then it will be an exempted supply. If my transaction is covered under the definition of supply, but the rate mentioned on that supply in the tariff is nil, then it is a nil rated supply. And if my transaction is export of goods or services, in case of export of goods or services, it will be a zero rated supply. Why it is a zero rated supply? Because I will not be paying any, in effect, I will not be paying any GST on the export transaction. In case of export, the government is not charging any GST on the input as well as output. So in case of export transaction, it is called a zero rated supply. So there is a difference between a zero rated supply and a nil rated supply. As a layman, I may say that zero rated and nil rated are one and the same thing. But as a commerce student, but when I know about GST, then I will never say that a nil rated supply or zero rated supply is one and the same thing. They are very much different things, and they have to be accordingly dealt with, right? So what are the ingredients of my invoice? First ingredient is who is the supplier. So I have to give the details of the supplier, the name of the supplier, the address of the supplier, its GST, IN, etc., etc. Then I have to tell in face of the invoice that who is the recipient of the supply. If it is a B2B supply, then I have to code his GST number also on the invoice itself. Then only it will be a valid invoice. As per the GST provisions, there are 19 ingredients which are to be there on an invoice to make it a valid invoice. Then only an invoice. Whenever we purchase many things nowadays, and when we come across many invoices, have we ever checked that the invoice we are getting is a valid invoice under GST or not? Whether we check it, we know how to check it, that whether it is a valid GST invoice. So What are the basic ingredients which should be present in that invoice to make it a valid tax invoice? It is the supplier's details, recipient details, type of supply. What is the type of my supply? The brief introduction of my supply, its HSN code, harmonized system of nomenclature, the HSN code of that supply, the rate of tax, and the amount of tax should be mentioned on that document that is called invoice. Type of tax, CGST, SGST, or IGST, what I am charging on it. These are very basic things which should be mentioned on each and every invoice to make it a sorry sorry valid tax invoice. Only then, if I am a recipient, I am a B2B person, I am doing a business and I am getting any invoice from somebody, I will be getting an input tax credit only when I am in possession of a valid tax invoice. Then only I will be getting the input tax credit on the invoices which I have getting from my vendors. So it is very important for me to understand that I am getting a proper invoice. Secondly, there is a concept of e-invoice also. What is e-invoice? E-invoice is an invoice which is to be generated through a GST e-invoice portal. It has to be registered there. Invoice is generated at my end, but a unique IRN number, that is invoice recognition number, invoice reference number, is given on that invoice, and a QR code is also given on that invoice. Then it will be making a e-invoice. Every supplier whose turnover is more than rupees 10 crores in a year, whose annual turnover is more than 10 crore in any of the previous year from the instructions of the GST, is liable to raise an e-invoice only. He can only raise an e-invoice. So initially that limit was 100 crores, then it come down to 50 crores, then it come down to 20 crores, now it is 10 crores. And most probably that limit will reduce to 5 crores in very near future. So you may understand the thing that how important it is to raise a valid invoice in GST. Now, what are the main GST returns? I am not talking about all of the returns which are to be filed under GST regime for different type of registration, for different type of suppliers like e-commerce and all those things. I am talking about main GST returns which generally each and every supplier has to file in the GST arena. First one is GSTR1 returns. GSTR1 is to be, these returns are to be filed on monthly basis, and in some cases it can be filed on quarterly basis also. So the GSTR1 returns are the returns of my output supplies, my sales transactions, which are to be recorded invoice wise in case of B2B transaction, and in case of B2C transaction, a consolidated amount up to a certain limit can be given on in that GSTR1. Generally, this GSTR1 return has to be filed by 11th of the next month in which my supplies are effected. And in up to the 20th of the next month, I have to file a consolidated return that is called GSTR3B returns. It contains summary details of all my output supplies, all my input supplies, input tax credit that I have taken, tax payable on my output supply, and the resultant tax which I have to ultimately pay, that has to be paid through this return. I can pay the tax on my supplies through this return only, that is GSTR3B return. At the time of filing of GSTR1 return, I don't have to pay any tax. I am just giving the details of my outward supplies. But in case of GSTR3B returns, I am giving each and every detail of my transactions during a particular tax period, and I have to disclose the my output supplies, my input supplies, my output tax, my input tax, and the resultant tax which I have to pay, and I have to pay this tax on through this return only. And there are, sorry, this is again written GSTR 3B, it is GSTR 9C return. Actually, two type of annual returns are also to be filed. One is GSTR 9 and other is GSTR 9 C. GSTR 9 is the consolidation of all my data, all my returns, which I have filed in a year. This return has to be filed by 31st of December of the next year. Like for 22-23, I have to file this return by 31st of December 2023. And it will contain the summary of all the data which I have fetch into my returns in during the year. Whatever transaction I have done during the year, it has to be incorporated in my GSTR 9 return. And now, what is GSTR 9C? GSTR 9C is an annual reconciliation statement between my GSTR 9 return and my books of accounts. So, whatever I have shown in my books of account, my balance sheet, my profit and loss account, my trial balance, and whatever I have shown in the GSTR 9 return, they are to be reconciled. And if there is any difference coming out to be there, I have to show what is the difference in this and why this difference is there. And due to that difference, if any tax is payable, then I have to pay that tax also. So we are coming to the last leg of our presentation today. So whenever there is a thing, there are some other questions which I try to answer through the GST Act. When we are reading this GST Act, first of all, I have to see whether it is a supply, what rate will be applicable on that, whether it is not covered under any exemption notification, or whether it is a no supply case, or whether it is a zero supply case. All those things has to be taken. Then I have to see that when I have to pay GST, at what point of time I have to pay GST. So how it is to be taken and where to pay GST, which state will get the GST, what is the place of supply of that GST, then on which amount I have to pay GST, what is the valuation of my transaction on which I have to pay GST, and how I have to adjust the ITC, keeping in view all the provisions of the GST law. So, for when to pay GST, I have to refer to the time of supply provisions. Why I have to refer to this? I have raised a bill, say in the month of January 23. I have dispatched some goods in the month of February, say February 1st, and the customer has received those goods on 10th of February. So what will be my time at in which return I have to incorporate this? Whether in the month of January I have to pay GST, whether in the month of February I have to pay GST. This answer is given in the time of supply of provisions, that where we have to, when we have to pay GST on a particular transaction, in which return, in which GSTR 1 and GSTR 3B, I have to incorporate that particular transaction. Where to pay GST? So, where to pay GST? We have to pay GST on the GST common portal. That's it? No. Which state will get the GST? Whether it is a CGST SGST transaction or whether it is a IGST transaction. Where it is whether it is an interstate transaction or whether it is an intrastate transaction. I have to see that. I am sitting in my office. You came from, let's say, Noida to me, take some advice from me and pay some amount to me. I have raised a bill on you. Whether it is an interstate transaction or intrastate transaction, the customer is coming from Noida, but the supply is given in this state only. So whether I have to charge GST or IGST on that or CGST, SGST thereon, that has to be seen from the place of supply provisions given under the Integrated GST Act. That I have to see. When to pay GST, time of supply is in CGST Act. But where to pay GST, I have to see IGST Act. and on what value I have to pay GST. Like I have said, in some transaction, even if there is no consideration, GST has to be paid. So how I will be calculating that GST? So that GST will be calculation on the basis of the valuation provisions contained in the GST Act and the rules under the GST rules. So there are many transactions in which the transaction value and the value on which GST is to be paid may be different. I think you can understand this thing, that I am supplying a particular thing to you on rupee, or let's say I'm charging you rupees 100. But the GST, according to GST law, you may land up paying GST on rupees 200. There may be such transaction. What are those transactions? In case of related party transaction, in case of branch transfer, in case of some other employer-employee relationship, I have to see what is the value of supply of that thing, and that I have to see from valuation provisions. And last but not the least is the adjustment of ITC. I am saying that whenever I purchase something, I will take the ITC. Whenever I sell something, I will charge GST, and I will adjust both of these while paying my GST liability. As simple as that. But friends, it is not that simple. There are many restrictions, many conditions which have to be satisfied in order to avail the input tax credit. I have to see each and every conditions which are contained in the GST law and the formula of GST and the formula given in rules of CGST rules. That has to be followed, my be, then only I will be able to adjust my ITC legally. Otherwise, if I take wrong ITC, then that ITC will not be my correct ITC, and I may land up giving that ITC back. I have to pay that ITC back along with interest, along with penalties, and I have to face the heat of the department on that issue. So I should be very careful while taking the ITC, that how, whether it is a legal ITC and up to what time I can take that ITC, in what form I have to take this ITC, and how to claim this ITC. I have to be very vigilant upon that. So besides all those things, there are some other things which are I am not discussing in detail today, like I have told you, e-invoice provisions, e-way bill. If I am uh, supplying any goods and the movement is involved therein, then there should be a e-way bill which should be accompanied with the movement of the goods. So the e-way bill provisions I have to see. After that, I have to see the provision relating to assessment and adjudication, the penalty provisions. If I have made some mistake, and how much penalty I may land up paying. There are audits under GST to be done by the department people, how that audit has to be conducted, in which scenario it has to be conducted. If there is any demand from the, or some show cause notice from the department, how that show cause notice has to be dealt with, how that demand has to be dealt with. If I am not agreeing to the demand, then in that case I have to go into the appeal. So how, what are those appeal provisions, in which time limit I have to file the appeal, which authority I have to file appeal, all those things has to be known to me, so that I can be very well in the GST regime, and I can go through all those things. Then only I will be understanding the concept of GST in detail. With these things, what I have shared with you in, I am trying to do this in most simple language and most simple way. Thank you for the patient hearing, and over to the organizers. Thank you very much.
Thank you so much, sir, for this wonderful knowledge. This session is literally grateful and knowledgeable for all of us. Before moving forward to the Q&A sessions, I request all the participants to please fill up the forms for both the forms, that is feedback form and the attendance sheet. And like for the Q&A session, sir, we have many questions, but due to shortage of time, we are like We are taking only like important questions which we are thinking that it is important. So a question from Vipul's side is, what is the difference between cascading and multiplicity of taxes? Which one of is eliminated by GST completely? So
Cascading and
yeah,
multiplicity.
multiplicity of taxes.
Okay. Uh, Basically, I have dealt with both of these in my presentation. I will tell you what is the difference between these. On one transaction, I have told you VAT was also applicable, service tax was also applicable, maybe excise is also applicable, entry tax is also applicable. That is called multiplicity of taxes. Multiple taxes are applicable on a transaction or in a business. It is called multiplicity of taxes. Since all these taxes are subsumed into GST, now there is only one tax, that is GST. So this is a concept of multiplicity of taxes. Second is cascading effect. Cascading effect is when I don't get the input tax credit of a particular transaction. You remember that slide of input tax credit? I have said that in case of the sale of a laptop, if I am not getting the input tax credit, then my cost will increase. My cost will increase to the amount of taxes, 18,000 in that example. So a cascading effect is when I don't get the input tax credit and I am giving tax on tax. Again, I will include that amount in my cost and then I will take the profit of say 50,000. Then again, I will be giving the GST on the total transaction. Then it will be a cascading effect. When I get the input tax credit, then this cascading effect is eliminated. I hope I can able to convey.
Yeah, hopefully the like you explained it very well. Hopefully the doubt is clear now. Like, sir, can we have a like QL? Like, we have two more questions, but like as sir is going, like now I would like to invite Mr. Manoj Kapoor, the co-founder and CEO of Texo, to share some words with us and to give some knowledge about that also.
Yeah, hello, good evening, friends. First of all, I want to say thank you to Ritika Jain ji, Professor Ritika Jain ji, and C. Anup Gupta ji for the arranging such a wonderful deliberation. And definitely hats on to the moderator and Juhi ji both for the arranging the very good sessions. And basically, I am the co-founder and the CEO of the Texo. And purpose of today's webinar is that he create the awareness about the young people about the GST, like rightly said by the Ritika ma'am. This is the equally useful for the student, also for the those non-commerce students who want to start their own business, those want to start their own journey. Now, with the question is that why we start, as you aware that also be the displayed in front of you. We started the 2 month certificate course on the GST. And when we talk about any course, then always two questions comes to mind. One is the why this course, and second is the why from this organization. I think this is also comes in the discussion. Already more than 1.4 CR SSC exist in India in the GST, and every month 2 to 3 lakhs addition is happening in the field of GST. It means the scope of the GST for the career perspective is a very good. And secondly, I think the government focus is also nowadays on the indirect tax collection. Since the Modi government came in the last 7-8 years, the indirect tax contribution is also going up. So if you are looking for a career in the finance field, then indirect tax and GST is the best thing. And why this course? Reason is that we are giving this course is a UGC recognized course, and you got this certificate after this course with the recognition from the government of India, Delhi University, and with the logo of IE and the Textbook Academy. And the faculty we have like Anupji, Atulji, those are the very known faculty all across the India and giving the lots of lecture in the ICIs and the different industrial bodies. So courses are totally practical oriented. So employability is our main agenda which we have in our mind. And next thing is that the our academic council who designed this course, under whom guidance we designed this course, is also well known fact, like Professor I. M. Pandey C. Girish Ahuja ji, Atul Gupta ji. So these are the some names under whose guidance we develop these courses. And top of it is the price of the course. Is the this we are doing is as a non profitable call, and the cost is also very nominal. Is the 1450 rupees for a complete course. And this is from the my side. If you are looking for a career in the taxation or you want to start some business, so basic knowledge of the GST in today's scenario is the must. I think this is the from my side. And thank you very much for the all participants and delegates to come and join this program. Thank you, Juiji.
Thank you so much, sir. Thank you so much. Moving further with the Q&A sessions, as like due to some urgent work, we need to take this in between also. Sir, do we have Anup sir here?
Yes, we have Anup sir. Prerna, you can take up other questions.
Yeah. Okay, yeah, sure. So there is another question from a student side, like can composition scheme be really effective in practical life as it make you ineligible for ITC for some concessional rate in GST? Sir, can you please clear this out?
Give me a minute. I'll just check whether he's available or not.
Okay. Prerna, probably we can take up this as a last question, right? And then
Yes,
we can
ma'am.
wind up the
Yeah.
session with a vote of thanks.
Prerna, sir is back. You can ask the question again if you may.
Yeah, please.
Yeah, sure. So the question is, can composition scheme be really effective in practical life as it make you ineligible for ITC or some concessional rate in GST?
Actually, composition scheme is if I say that since we don't get the ITC, so we have to pay a concessional rate of tax. In some scenarios, it is beneficial for the SSCs to take that benefit of composition scheme. Like I give you an example, I am a small retailer, and if I charge GST on my supplies, then the customers are reluctant to give that GST to me. So I will not be able to get the GST from the customers. But on the other hand, I will have to pay the GST to the government. In those cases, I will, and all my transactions are on intrastate transaction. There is no interstate transaction. In that cases, I may opt for composition scheme, and I will be getting the benefit of the lower rate of tax, say 1% or 2%, whatever it is, that I have to give to the government, and I will be a happy person in that case. Like in case of small saloons, in case of retail shops, it is very beneficial to those persons.
Okay, sir. Hope the doubt is clear. Like concluding this session with this, as we are short of time. Also, thank you so much. Like in last, I want to thank C. Anup Gupta sir, Mr. Manoj Kapoor sir, Ms. Juhi, Dr. Ritika Jain ma'am, and Dr. Shalu Seni ma'am for hosting this informative session for all of us. Thank you so much.
Thank you.
Thank you, sir. Thank you, sir, everybody. Thank you, Hansraj college team, for having us here. Thank you, Dr. Ritika, especially. Thank you, Anup, sir. We all have a lovely evening. Dr. Ritika, you're on mute.
Yeah. It's our pleasure. It was a very informative session that has been organized for the students. And yes, there were a lot of takeaways. And in fact, you also promoted about one of the certificate course. Those who are really interested in, having further knowledge about the GST practical knowledge, these students can also think about joining that course. So thank you, ma'am. Okay, ma'am.